If the U.S. goes to full-scale war with Iran, it won't just be a foreign policy disaster. It could be an economic earthquake. Just when we are seeing progress in the American economy, this may be coming. Oil analysts are already warning that crude prices could skyrocket past $150 a barrel, triggering global inflation, energy shortages, a potential recession that would make 2008 look like a fun picnic. Our guest today is economist Peter St. Onge, one of the sharpest critics of central planning, reckless spending, and now war-driven economic fallout. So let's break it down. Peter, what do you think? Is this scare tactics that the war would result in global inflation, or is there real threat here?
So 300 is, I think, hyped. That's coming from the Iraqi foreign minister. Iraq is sympathetic to Iran. Part of that is because it's the neighbor, and if there's a real war in Iran, then they're going to have a humanitarian crisis in Iraq. It's going to be blowback. Some of that is also just that the Iraqi government is sympathetic to Iran. So we spent over $1 trillion giving Iran an ally, so that was smart. But 300 is definitely an outlier. Just for argument's sake, if we did get $300 oil, you'd be looking at something like $12 a gallon gas, 10% inflation. That would be an absolute catastrophe. It's also unlikely. If we sort of go back to the real world, JP Morgan, Mizuho, Deutsche Bank, they're all looking at scenarios about 120 to 115 oil. Now, that's still very high. You mentioned earlier it's at 72 right now, so that's almost a doubling of oil prices. That would take us to something like $5 gasoline. It would take inflation to 4 or 5% if it kept going. So that would wipe out all of Trump's inflation gains. He's been doing great so far. Inflation's been about 1.5%. So he did what he promised, which was get rid of Biden inflation. If he starts a real war in Iran, that's going to completely reverse that. You'll also have other knock-on effects to it. You have financial markets, you have repricing of assets. The $300 scenario, I think the only way that that's really going to happen is if you get a blockade of the Straits of Hormuz. So the straits themselves are something like 21 nautical miles, but the shipping lanes are closer to 6 miles. 6 miles is roughly the Hudson River at New York. Okay, that's a very, very narrow, and that runs all alongside Iran. If that is threatened, then you get to a scenario where Persian Gulf oil could be theoretically blockaded. That does two things. One of them is the flow of oil. So back in the 70s, a lot of Persian Gulf oil went to the U.S. That's not the case anymore. We have our own oil. It actually doesn't even make up much of Europe's oil anymore. So only about 6% of Europe's supply comes out of the Persian Gulf. What it does do is it kneecaps China. So about 1/3 of the oil used in China comes from the Persian Gulf. This is true across all of Asia, India, Singapore, Japan. All of them are deeply reliant on Persian Gulf oil. If that cuts off, you're going to have a crisis in those countries. But of course, the way that world oil markets work is that even if you're not using any Persian Gulf oil, still, if China or Japan cannot get their oil, they're going to be in a desperate search. They're going to bid up Texas oil. They're going to bid it up everywhere else. It's going to be an absolute payday for Russia, incidentally. So in terms of, crossed wires on foreign policy, but that could get us to 130. It could even get us higher than that if there's a proper blockade.
Have you heard this term, Peter, the doom economy? This term I've started learning about over the past couple of months, this idea that there's a collaboration really between like the military industrial complex, the media, and government intelligence agencies basically pushing the American public to become, I guess the word is sympathetic to a long drawn out war, that we would be somehow sympathetic to the idea of going fully into a war with Iran because it would be they would set the stage for us to be sympathetic for it. What do you think about the doom economy argument in all of this?
Well, I think the logic of it is impeccable. I mean, war, next to central banking, war is the most profitable activity that a government can visit upon its citizens. So I have no doubt that, any business, you've got a product, In the case of wars, you can't really sell it forever. Eventually, people get sick of paying for Afghanistan. So you got to have this constant stream of new wars coming in to keep the money flowing. So I'm absolutely sympathetic. There's a ton of money in war. It's bipartisan. They're very smart in who they bribe. They spread their bets out. They buy weapons from an Alabama factory, a New Mexico factory. They keep everybody on side. So I think without a doubt, governments, honestly, probably for a millennia, you probably go back to the Roman Empire. And that's been the case where governments have a very, very deep incentive to excite people about war. And unfortunately, when it comes to war, there's this sort of human instinct to view it very heroically, like the sacrifices are something beautiful. If you look at the Blitz during World War II, for example, any British propaganda about the war, they're going to celebrate how amazing the Blitz was, here we were in the subway tunnels having tea. And, people never stop and say, well, maybe you could have prevented the war, earlier.
Right. Yeah.
Maybe you guys should have talked in 1914 or 1937 for that matter. And then we wouldn't have had any of it, including the death camps. But instead, they sort of gloss right past that and they say, well, war is just part of nature. It falls out of heavens. What you going to do? But by gum, it's heroic. It's represented as like the pinnacle of human existence is suffering during war.
Now, one of the books you talk about a lot is End the Fed by Ron Paul. Ron Paul says very clearly that if we did not have the Fed, we would not be able to afford to go into these wars. Yeah. The Fed manipulates the U.S. dollar so that we can do this. So can you explain that a little bit? Because we are going into war on a financial perversion.
Yeah, so the Fed is basically the venture capitalist of every new crisis. And this is true of wars. It's also true of COVID. Right. If you imagine early in COVID, so, the government says, all right, we're going to shut down the entire economy. GDP is going to fall by half. Tax revenue is going to fall by half. But that's OK. We can just lay off all the government workers. Right. No way. Right. They never would have done the lockdowns. The only reason they could do the lockdowns is because they go to the central bank. They get the Fed to print up $7 trillion to bribe people to sit on the couch. So when we all sat there during COVID and we said, what the heck happened to the American people that they're putting up with this? Well, yeah, they were paid to. They were paid to because the central bank has an unlimited money printer. So that's true in COVID. That's true in every single war. Right. If you sat down in the beginning of 9/11, if you sat down in the beginning of any war that we've had over the past 50 years, all these wars of choice, if you sat down and explained to the American people, so here's what it's going to cost you. Right. We're going to have to get rid of, public schools, but we'll be able to invade this new country. Nobody will put up with it. So the only reason all this stuff can work is that the Fed stands ready to finance all the government deficits. They can finance the war until it gets running to the point where now Americans are dying. At that point, you don't need to boost the public relations anymore. Right now, people are angry. So it's really kind of the venture capitalists. It can stand up, get the war through that seed phase until it can sustain itself with American blood. So we are seeing that this time. This is the standard pattern that will continue as long as you have a central bank.
Peter, we'll get you out of here on this. How close to sort of economic ruin do you think we're sitting right now in the United States? And will this war push us over the edge?
I think as long as we stay out of it, I don't think that we're in major danger. And the reason is because Israel only has so many resources. Israel so far has been doing things surgically. They've been choosing their targets. And partly that's because they have to. They only have so many resources. If, on the other hand, if we jump in with both feet, we move carrier groups over there, we have a lot more resources. We could make this a much bigger war. I hope we don't, because at that point, the entire Trump boom ends. All the momentum he's got right now, the goodwill that he's got fixing the Biden mess, all of that turns around.
Yeah, feels like it. Why do you think he would take that risk? I took him on his word that economic prosperity was one of his top priorities.
Yeah, one of my biggest concerns, and we've had this for 50 years, presidents sit there in these intelligence briefings and, people come in and it's really a dog and pony. It's like a PR show and they just get talked into this stuff. And I remember early in the Trump administration, he was not doing his daily briefings and Politico and the left wingers were concerned. They were like, oh, he's going to lose control. And I was sitting there like, thank God that he's not getting pushed this propaganda every morning. If I had to sit down every morning for half an hour with some, CIA agent who's trying to sell me on war, it wears you down. So I assume, they push. They got smart people trying to sell these wars. And unfortunately, it looks like they've broken through.
Well, that's a more positive spin than the rest of us are taking. So the rest of us are just thinking there must be some kind of compromise, you know? So, I mean, yeah, I really want to give him the benefit of the doubt because of these unorthodox promises that he made. And it's just wearing me down. It's wearing me down. So anyway, thank you for your expertise. Really, really appreciate it. And
go fill up your tanks now.
Yeah,
right?
Peter.
Absolutely. Thanks, guys.
Thanks, Peter. Now I want to talk to you about today's sponsor, which is tied directly to everything we're just talking about. With the BRICS nations buying up as many precious minerals as they can, throwing their support right now behind Iran. This week, gold closed out the week at the highest ever level. We are experiencing precious metals bull market right now. I'm so thrilled about this because I see the trend. I see what's happening with the US dollar, government currencies right now. They're in a downward spiral. We've been warning about this for years on the show. I mean, I'm not excited about the US dollar collapsing, but we've been preparing. If you've been watching my show for years, you know that we've been preparing. Record sums are now flowing into gold this year. It's unprecedented. Take a look at this. Gold is up 27.7% in 2025, while the dollar is down nearly 9%. The dollar is trading at a 3-year low right now. That's how tremendous this trend is right now. And I don't remember it ever being like this. But the biggest story, in my opinion, is silver's ascent to 13-year highs as we speak, alongside the breakout in mining stocks, as represented by the GDXJ index, which is up nearly 45% so far in 2025. The dollar right now is having a dismal 2025. And in my opinion, it's about to get worse. Take a look at the latest price projections from the world's largest investment banks just around gold. Take a look at JP Morgan. Gold, Q4 2025. Average price, $3,675 an ounce. That's a projection. And expecting to rise to $4,000 an ounce by Q2 of early part of next year, 2026. $4,000 an ounce. Long-term potential could reach $6,000 an ounce. Unbelievable. And then gold here, 2025, ending with the forecast raising to $3,700 an ounce. By mid-2026, expected to reach $4,000 an ounce. Again, these are multiple analysts. And here's Bank of America. 2026 forecast $4,000 an ounce. Silver, 2026 forecast at $40 an ounce, with the potential to outperform gold by the end of this year. Therefore, with all of these powerful trends in place, when I see a gold company that I love literally trading at its lows for 2025 right now, with insiders and co-founders are buying up shares like crazy seemingly every week, they've accumulated more than $1.2 million worth, yes, of buying up their own shares at a pace I have personally never encountered in my life with any other gold company. I wanted to share it with you. So today's sponsor is ASCAP Ventures. Here's the ticker on your screen. As you can see on the screen, it's trading at an absolute low for the year. Mario and Tyron, the co-founders of this company, are currently collectively accumulating millions of shares of ASCAP Ventures. They're buying up millions of shares of their own company. So just in the past few days, on top of the $1.2 million worth of shares already purchased by management, in June 2025 alone, Mario Vitro bought 140,000 shares. Tyron Breitenbach bought 100,000 shares. Blake McLaughlin, the VP of Exploration, bought 30,000 shares. Robert Dubois bought 300,000 shares in June. And look at this, Robert Dubois bought 300,000 shares in June at 17 cents Canadian. That's above the current price. Take a look at this on the screen. Again, I'm personally astounded by this. I don't remember seeing any other company whose insiders are buying stock at this scope. So when a private equity fund dissolved its assets and began liquidating, Mario Vitro and Tyron Breitenbach noticed that the fund owned one of the largest undeveloped gold deposits in Nevada. It was just sitting in their portfolio. So right before gold's breakout over $2,000 an ounce, they were able to acquire the Converse gold deposit from them. Think about that. Because the price is now up over 70% since they bought it. So the timing worked out incredibly well for them. Converse is ASCAP Ventures' flagship gold deposit. It is the largest gold deposit. We're seeing more and more mergers and acquisitions, which is the reason I'm taking time to address this point. The Converse gold deposit contains 5.57 million ounces of gold equivalent resource, measured and indicated at 0.525 grams per ton, plus an additional 0.42 million ounces of the inferred at 0.528 grams per ton. I know that's a lot of technical jargon, but it's astonishing. I want you to go through the numbers yourself. You can. I'll have links in the description. You can study it for yourself. So at today's market cap of just $34 million and with approximately $10 million in the treasury, this deposit is valued at only $5 an ounce of gold equivalent resource. So think about that. The valuation stands in stark contrast to comparable peers in the mining industry, which are valued at an average of $40 an ounce. So the difference is 8x or 87% less. And once again, the company is currently trading at its lowest price in 2025. So guys, do your own homework on this. I'll have links in the description below so you can dive more deeply into their projects. All of their financials are public. Study this. Look at it closely. Pay attention to what's happening right now macroeconomically around the world with all of these countries buying up gold and silver like it's going out of style, because it's not going out of style. And we'll see you back here real soon.